Today, we will talk about Bitcoin versus gold. Which is the better store of value? For centuries, gold has been the ultimate store of value, protecting wealth against inflation, economic instability, and currency devaluation. However, with the rise of Bitcoin, the debate over what constitutes the best store of value has intensified. Both Bitcoin and gold serve as alternatives to fiat currency, offering unique advantages and drawbacks. As digital assets gain more mainstream adoption, many investors are reconsidering whether Bitcoin could replace gold as the go-to store of value. To determine which asset is superior, we must evaluate their fundamental characteristics: historical performance, scarcity, security, portability, and utility. The case for gold, a timeless asset. Gold has been used as a store of value and medium of exchange for over 5,000 years. Its physical properties, scarcity, and universal acceptance make it a reliable hedge against inflation and economic downturns. Central banks and governments hold large reserves of gold as a financial safeguard, reinforcing its credibility. 1. Stability and historical performance. Gold has maintained purchasing power over centuries. While fiat currencies have collapsed due to inflation and mismanagement, gold has preserved wealth across generations. During economic crises, gold prices tend to rise as investors seek safe haven assets. For example, during the 2008 financial crisis, gold surged from around $800 per ounce to over $1,900 by 2011. 2. Scarcity and tangibility. Gold's supply is limited by nature. Mining production is slow, and central banks cannot print more gold like they do with paper money. This scarcity contributes to its enduring value. Additionally, gold is a tangible asset, meaning investors can physically own and store it. Unlike digital assets, gold does not rely on technology or electricity to maintain its value. 3. Inflation hedge. Gold is widely considered a hedge against inflation. As central banks print more money, fiat currencies lose purchasing power, but gold's value often rises. This inverse relationship with inflation makes gold a preferred asset for preserving wealth during economic uncertainty. 4. Liquidity and global recognition. Gold is highly liquid and can be easily converted into cash anywhere in the world. Whether in the form of bars, coins, or jewelry, gold holds value across cultures and economies, making it universally accepted. The case for Bitcoin, the digital gold. Bitcoin, launched in 2009, is often referred to as digital gold due to its fixed supply and decentralized nature. Unlike gold, Bitcoin is purely digital, but it offers several advantages that could make it a superior store of value in the modern world. 1. Fixed supply and digital scarcity. Bitcoin has a total supply cap of 21 million coins, making it more scarce than gold. While new gold deposits can still be discovered, Bitcoin's supply is mathematically limited by its code, ensuring no more can ever be created. This built-in scarcity makes Bitcoin a deflationary asset, which could drive its value higher over time. 2. Portability and ease of transfer. Bitcoin is significantly easier to transfer and store than gold. While gold requires physical security, storage facilities, and transportation costs, Bitcoin can be stored on a hardware wallet or even memorized using a seed phrase. Transactions can be executed instantly across the globe with minimal fees compared to gold, which requires expensive verification and handling. 3. Security and transparency. Bitcoin operates on a decentralized blockchain, meaning no single entity controls it. This prevents manipulation and counterfeiting, unlike gold, where purity and authenticity must be verified. Additionally, Bitcoin transactions are transparent and recorded on an immutable ledger, making them verifiable by anyone. 4. Resistance to seizure and confiscation. Gold has been confiscated in the past, such as during the 1933 U.S. Executive Order 6102, which forced citizens to turn in their gold holdings. Bitcoin, on the other hand, can be stored in decentralized wallets and protected with cryptographic security, making it nearly impossible for governments to seize without the private key. 5. performance and returns. While gold has provided steady returns over decades, Bitcoin has vastly outperformed it in terms of price appreciation. Since its creation, Bitcoin has grown from being nearly worthless to reaching all-time highs above $60,000. Even considering Bitcoin's volatility, its long-term growth rate has exceeded that of gold by a significant margin. Which one is the better store value? Why gold might be better? For conservative investors who prefer stability, gold remains a tried and tested store of value. Its historical track record, universal recognition, and ability to hold value over centuries make it a reliable choice. Additionally, gold is less volatile than Bitcoin, making it a safer option for wealth preservation. Why Bitcoin might be better? For tech-savvy and forward-thinking investors, Bitcoin presents an opportunity for high returns and financial sovereignty. Its decentralized nature, ease of storage, and fixed supply make it an attractive hedge against inflation. If Bitcoin continues to gain institutional adoption and regulatory clarity, it could surpass gold as the preferred store of value in the digital age. The future. Can Bitcoin replace gold? While Bitcoin and gold serve similar purposes, they cater to different types of investors. Bitcoin's potential to replace gold depends on regulatory developments, adoption rates, and technological advancements. Some analysts believe that Bitcoin will eventually overtake gold as the dominant store of value due to its superior features and increasing acceptance by financial institutions. However, gold's long history and tangible nature ensure it will remain a valuable asset for years to come. A balanced approach. Ultimately, the best strategy may be to hold both assets in a diversified portfolio. Gold offers stability and a proven track record, while Bitcoin provides growth potential and digital advantages. Investors seeking security may allocate a portion of their wealth to gold, while those looking for exponential gains and modern financial sovereignty may lean toward Bitcoin. As the financial landscape evolves, Bitcoin and gold can coexist as complementary stores of value, each playing a unique role in wealth preservation. What do you think of our video? Let me know in the comment section below. Also subscribe to our channel before you go. Thanks for watching.